Okay, so branded economy hotels. Two things I want to just talk about very briefly before we move on. First of all, not just cheap rooms. I think that's the notion very often that economy hotels are just cheap rooms. I'll come back to that a bit later and just clarify that. And then second, Premier Inn, probably a brand that most of you haven't really heard about so far. Our slogan is everything is premier except the price. And again, we'll elaborate on that a bit more as we go. Just before we go into discussing economy hotels, just very briefly, Premier Inn is owned by Whitbread PLC, which is a FTSE 100 company on the UK stock exchange. We're about a 3 billion market cap. The first hotel opened effectively 25 years ago, somewhere in the middle of the UK, initially as a travel inn, and then subsequently we went through a series of rebranding exercises. And currently the portfolio is known as Premier Inn. So with that, we've been in the business for about 25 years. Currently, we are the UK largest and fastest growing hotel chain. And at the moment, we own 630 hotels, roughly 49,000 rooms. So that's a unique aspect of Premier Inn, that we're in the budget space. Unlike most other players in this particular segment that either just manage or franchise, in our case, we actually own all our 630 rooms across the UK, Middle East, and India. In some cases, particularly the Middle East, we have partners, including the Emirates Group, as well as Qatar Foundation is one of our partners. We are a single brand operator, again, very different from most of the brands you may have come across over the years. We only operate a Premier Inn, which makes us, again, a unique player, and also implies that all our resources and technology, innovation, etc., and efforts are all going towards building that particular brand. As part of our group of brands, Whitbread also owns Costa Coffee, which is the second largest coffee outlet business in the world after Starbucks. And we're currently opening Costa Coffee outlets all over the world. At the moment, our offices are in Singapore and New Delhi. Just before we move on to just talk a little bit more about economy hotels in particular, just to give you some reference. Premier Inn brand has won many awards. I think the most notably, which I think is probably most relevant for this audience, is that in 2011 we were actually given the world leading budget hotel brand at the World Travel Awards, which effectively is the Oscars of the travel industry. So I guess that's a good indication of what the brand stands for, even though at the current moment Premier Inn is not necessarily represented in this part of the world. So branded economy hotels. First of all, as I said at the outset, not just cheap hotel rooms. There are obviously loads of economy hotels which tend to be cheap hotel rooms and not necessarily fulfill the concept as such behind economy hotels. As far as for this presentation is concerned, I think the emphasis is really on delivering quality accommodation with no frills public areas at very affordable prices. And I think that's the concept that will have to be followed through from start to finish in order to be able to deliver what I call an economy hotel. Clearly, as we see in the region with the rise of economy brands, the hotels are effectively addressing the basic needs of travelers. Obviously, over the years, lots of research has been done. I think, quite frankly, every hotelier understands what the basic needs are. Also, obviously, the travelers staying in hotels understand what the basic needs are. And quite frankly, I think a group like Premier Inn, but also others, have been able to effectively zoom into these basic requirements and have been able to deliver a concept which is delivered on a consistent basis and has then created that level of success. More importantly, perhaps, looking at the Asia-Pacific region, economy hotels are clearly tapping into what I call the fastest growing demand segment. Clearly over the last, post-1998, if you like, the emergence of the region has seen a lot of travelers, new travelers, but also, people that have generally traveled before, but are looking for alternative products, are looking to look at propositions which are generally offering greater value, are better recognizable, and are addressing the basic needs. If you look at markets like Indonesia, if you look at markets like obviously China, there is an emergence of travelers that have limited budgets, however have been given the opportunity to travel, and are now looking for a quality product to stay at when they make those travels. I think a fundamental point when it comes to economy hotels is this market share driven. I think there are obviously a lot of hotel owners that tend to have one or two hotels and have limited facilities or small rooms and refer to their products as economy hotels. I think for the purpose of this conversation, when I talk about economy hotels, I'm really referring to a broader concept where effectively the people behind the brand are driving their business by creating market share. It's a bit like a 7-Eleven where effectively at the end of the day you would want to have a alternative or a hotel at every corner of the street with your flag on it. And I think if you look at our proposition in the UK, for instance, where we have over 45,000 rooms, within the radius of 5 miles, 75% of the people in the UK live within the radius of 5 miles from a Premier Inn. That gives you an indication of what the penetration is of our brand in that market and what it does in terms of driving margins and to generally capturing demand. So far, economy hotels are being offered by various hotel brands on various different bases. Most notably in this part of the world, still very much on a management contract basis, although increasingly we see franchise models, and the more adventurous operators are looking for lease models, and those that have a bit of money are prepared to put up a bit of capital to align themselves better with some of the developers. But I think it's fair enough to say that as we go into this further emergence of the economy sector in Asia Pacific, increasingly the franchising model is most likely the one that's going to dominate going forward. Very briefly, I'm sure everybody knows, but just I've just set out what a typical economy hotel would mean in terms of product. I think most importantly is arguably the room size. I think if you go back in history a little bit in Asia Pacific, traditionally rooms have been quite large, even those that are 3 or 4 star, certainly more towards the 30 square meters. I think the last 5 years with the introduction of a number of international brands, clearly there has been a greater introduction of smaller rooms, which has generally been well received by most of the end users. And again, going forward, that trend is certainly going to be the same, particularly as land values across major cities in Asia Pacific continue to be on the rise, or certainly not coming down. This is just a quick room product of Premier Inn. So what are some of the key success factors that I think we need to stress? First of all, I think there has to be a value proposition. Quite frankly, offering a limited service product where the consumer does not feel there is value is not meeting its objectives. Value is not just in terms of product, but also in terms of service delivery, as well as access to the product and generally the overall experience that one has, including some of the food and beverage and what have you. Clearly, in my mind, there are loads of smaller hotels with limited service that are defined as 3-star limited service hotels, but don't necessarily follow through. And at the end of the experience, there is no real value proposition because somehow, some of the basic requirements that the traveler has were neglected. Second is product consistency. I think very often again there is a tremendous amount of inconsistency, which effectively disallows the brand to become a well-recognized product. Going back to the retail example of 7-Eleven, where you find that all the 7-Elevens tend to be the same, it's very similar for the budget or the economy sector, where the product needs to be consistent. For example, if you would look at our portfolio in the UK, you'll find that the hotel in Glasgow is the same as the one in London. Similarly, our product in Dubai or Abu Dhabi is exactly the same as the product in Bangalore and Delhi. So that's really that's part and parcel of trying to build a brand and trying to make sure that people understand what they're getting. Similarly, the market share driven. For players like us, but equally so some of the other brands that are active in this particular space, it's all about market share. It doesn't serve us to have one hotel in Jakarta, one in Singapore, or one in Bangkok. The bottom line is that for us to be able to capture demand, it's a matter of offering the product in multiple locations on a similar basis. So that would imply that eventually we need to have enough market share in all these cities, all these countries, in order to be able to achieve that. Excellent service delivery. Sounds a little bit awkward when we talk about limited services, but I think the bottom line again is this, going back to the minimum basic requirements that each traveler has, that includes decent service. Obviously it's not 5-star service, but this service that is addressing some of the basic requirements, that is done and executed on a fairly consistent and genuine manner. Transparent pricing model and proprietary booking sites. Again, going back to this, at the moment there are lots of third-party booking sites like Bookings.com or Expedia or what have you. All of them are quite confusing and not necessarily give you the same rate within a 5-minute search, if you like. The whole game plan again here is to going back to the value proposition, going back to the product consistency, is also offering a pricing structure which ultimately is well understood by the consumer from day one. Yes, there could be some dynamic pricing, but at the same time the emphasis has to be that the consumer understands that the price is within a certain range and is offered on a consistent basis. From a development point of view, again, I think quite relevant in this part of the world is the fact that obviously these hotels are very easy and fast to construct. Markets like Thailand, Indonesia, etc., we're looking at building these hotels between 8 to 12 months, assuming obviously we get all the approvals in place and what have you. But generally, these can be built fairly quickly and get the market, within a reasonable amount of time. Very quickly, because I think my time is running out. Supply, I think going forward, clearly economy sector is a sector that will see tremendous growth in Asia Pacific going forward. I often make a comparison between what we've seen in the US and in Europe, where branded economy hotels have taken over by a mile most of the hotel markets, and traditionally or still very much show growth, whereas the 4- and 5-star sector generally has seen quite a bit of decline, whereas clearly the supply of economy hotels tends to grow. From a Whitbread or Premier Inn point of view, for instance, we have set a target to grow to 65,000 rooms in the UK alone. So that gives you an indication that despite some of the economic concerns that may exist in the UK, we've still set out a target to go to 65,000 rooms, which has been well received by the analyst community. Just very briefly in terms of demand, as I pointed out earlier, again, there is a lot of similarities here between what we've seen in the early days in Europe and the United States, where effectively there are a lot of unsatisfied customers that are not happy with what they've seen so far. A well thought out economy product will eventually capture that demand and effectively resegments what arguably may be a very fragmented market at first. On top of that, the economy hotels tend to induce quite a business which may not be visible to the to the sector immediately. But I think there is so much evidence, again, looking around the region, but also particularly again back in the US and Europe, where markets that had 1 or 2 hotels that were trading well below 50% year-round suddenly saw an economy hotel opening up that traded well beyond that. Again, demonstrating that if one delivers the basic requirements that the end user is looking for, then people will come and stay at your hotel. Let's move on. Looking at some of the performance data, this is obviously quite high level, but generally developing markets, Indonesia, Thailand, Malaysia, etc., China, typically between 35 to 50 US a night. Some secondary cities obviously is below that, and some more prominent cities or the resort destinations in Asia Pacific tend to go above that, but on balance, that's what we're looking at. And then obviously Singapore, Hong Kong is higher, as one would expect. Hotels are generally very much well received, evidenced by high occupancy. Profit margins are very attractive. typically on a gross operating profit, 60-65%. And because the room revenue tends to make up the majority, there's high operational leverage, which then further drives the bottom line, and particularly if markets see strong growth in demand. Finally, a last point, for those interested in this particular sector, I put together a quick operator selection checklist. These are 5 questions. First of all, are they investing in the brand or rollout? I think that's a fundamental question, because the key issue here is that if one does not work with a budget or economy brand that has eventually the objective to become a market leader, then you're not actually fulfilling or following through on the concept behind economy hotels. So in this particular instance, are companies investing in the brands? I think the reality is that most of the economy brands that are active today tend to be part of larger hotel companies and have recently started to launch their economy brands in this particular part of the region. However, don't necessarily have dedicated teams, nor is it such that they are prepared to put money behind the brand. This just put this in contrast. When it comes to Premier Inn, again, obviously, because we are a single brand operator, we don't actually end up having to choose between our brands. But more importantly, we are investing heavily in our brand and putting our money behind our brand by actually partnering with people on the ground in Asia Pacific in terms of being active joint venture partners, or potentially providing all types of capital support, which again allows us to accelerate the expansion of our brand in this part of the region. So are they investing in the brand? Very critical. Many of them are not. What's the end game? As I pointed out, the end game has to be that the brand ultimately generates enough market share that it stands out. Again, if one does not invest in the brand, the end game is unlikely to be a market share, and eventually one may end up owning a hotel, which is one of a few rather than one of many, which arguably, as I said, is the end game for this particular sector. And that obviously ties into the third point, which is we stand to gain in the partnership. Is franchising available? As I pointed out at the outset, franchising is becoming more of a prominent growth strategy among some of the operators. At this juncture, though, even though I think one realizes that that's the way forward in order to achieve rapid growth and distribution of the brand, the reality, though, is that most brands remain very reluctant to actually give the brand to third-party operators. More importantly, if you have a mixed portfolio of franchise and managed assets, the managed assets could well lose out because of the inferior quality that may be created by those that are franchised. It's obviously not the case everywhere, but that's a general thinking, I think, at this stage. And then finally is the dedicated regional support. The point there really is that I think one needs to realize that if you are taking an economy brand from a group that has 10 or 15 or 20 brands, you're not going to get the dedicated regional support that you need. And I think at the end, one needs to look at economy hotels in the same way as we look at 5-star hotels. It's just a different concept. So as much as we want the hotel company to pay attention to their 5-star brand and make sure they follow through on their promises and fill up the hotel with the highest paying customers, equally so, it's the same for economy hotels. So again, at the end of the day, everything tails back to, are they investing in the brand? And I think if you select a brand that works with a group, if you select a brand that can probably answer these questions in a fairly positive manner, you probably made the right choice.